One person, no public company, no prospectus, no one watching. He controlled more money than most investment banks, and outside a small circle, no one even knew he existed. Then, in just 3 days, he lost more money than anyone in financial history, at a speed no one thought possible. What do you think happened? Every financial empire has a shadow, a place where the numbers don't add up, a place where trust is the only currency that matters. This is the financial shadows. Today, the invisible fund that quietly became one of the biggest time bombs in modern financial history. Bill Hwang isn't a familiar name. He used to run a hedge fund, until regulators caught him trading on inside information and banned him from managing public money. For most people, that's where the career ends. Bill Hwang found a loophole instead. He turned his hedge fund into something called a family office. On paper, it just manages his own personal wealth. That one word, family, changes everything. Family offices don't have to disclose what they own. They don't answer to the same regulators. They operate almost entirely in the dark. And that's the first lesson in this story. The most dangerous risks in finance aren't usually hidden by criminals. They're hidden by loopholes that were never meant to be used this way. Hwang's strategy is easy to explain, dangerous to run. He borrows massive amounts of money from major banks to bet on a handful of stocks. This is called leverage, using borrowed money to make your bets bigger than your actual wealth. Here's the part that should worry you. He's borrowing from multiple banks at the same time. Credit Suisse, Nomura, Morgan Stanley, Goldman Sachs, and none of them know how much he's already borrowed from the others. Each bank only sees its own piece. He uses financial instruments called swaps, contracts that let him bet on a stock's price without technically owning the stock at all. This keeps his name off public records. No one watching the market can actually see how much he controls. Hwang concentrates the billions he's borrowed into just a handful of stocks, media companies, Chinese tech firms. As their prices rise, his paper wealth explodes. At his peak, this quiet, banned money manager is sitting on tens of billions of dollars in gains, almost completely invisible to the outside world. But concentration is a double-edged sword. When a handful of stocks make you rich, a handful of bad days can wipe you out. And in late March 2021, one of his key stocks suddenly drops. The house of cards doesn't wait to see what happens next. When a leveraged bet goes bad, banks demand more cash to cover the risk. This is called a margin call. Hwang can't cover it. His banks realize almost simultaneously that they're all exposed to the same collapsing position, and none of them knew the others were exposed too. It turns into a race. Whichever bank sells first sells at a better price. Whichever bank waits loses more. Some banks quietly dump billions in stock before anyone else finds out. Others are left holding their positions as the price collapses beneath them. In just 3 trading days, more than $10 billion in bank losses evaporate. Archegos itself, once worth tens of billions, is wiped out completely. Bill Hwang is later charged with fraud and market manipulation. This wasn't just the story of one investor. It was the story of a system where every bank guarded its own secrets so well they couldn't see the danger standing right in front of them. Credit Suisse never fully recovered its reputation. Regulators were left asking how so much risk could stay hidden in plain sight for so long. The lesson isn't complicated. Secrecy doesn't remove risk. It just hides who's carrying it. When no one can see the whole picture, everyone is more exposed than they think. Every shadow has a system behind it. Every collapse has a warning someone chose to ignore. Archegos didn't need the public's trust. It just needed the banks to trust each other a little too much. If banks can't see how much risk their own clients are taking on elsewhere, who do you think should be responsible for catching it? Let me know below. This video is for educational and historical storytelling purposes only. It is not financial advice.